Hi there, we're now well into the planning process, and today we're going to discuss the different types of insurances that you may require. The purpose of this video is to explain those different types of cover and also to try and help you answer the short questionnaire that we require later, which will help us appropriately assess your insurance needs. So firstly, let me explain the 4 different types of cover that we have, what they do and why you should consider them and whether you actually require them. The first one is life insurance. Life insurance is fundamentally about protecting the people that depend on you financially. And here's how it works. You pay a regular premium to an insurance company, and if you pass away while that policy is active, your chosen beneficiaries, typically your family members, receive a lump sum payment. Why do you need it? Well, if you have people who rely on your income, like a partner or children or maybe aging parents, the life insurance ensures that they are able to maintain the standard of living while you're no longer around. This money can also help cover mortgage repayments, daily expenses, education costs, and any other debts that you may leave behind. Without life insurance, the financial burden could fall entirely on your loved ones during an already difficult time. Number 2 is total and permanent disability insurance, or TPD. TPD insurance protects you if you become permanently incapacitated and are unable to perform your work duties due to illness or injury. How it works is if you suffer a disability that prevents you from ever working again, either in your specific occupation or any other occupation, depending on your policy, TPD cover will pay you out a lump sum. Why you might need it? Well, a permanent disability doesn't just affect your ability to earn. It often comes with significant additional costs. That payment can help cover medical bills, rehabilitation expenses, home modifications, and ongoing care needs. It also provides financial security when your earning capacity is permanently reduced or eliminated. People often want a lump sum payment to make sure that they can pay off all their debts, like their mortgage, in order to leave their family debt-free in their absence. This cover fills the gap when your condition is permanent, unlike temporary disability cover covered by income protection. Which brings us to number 3, income protection insurance. Income protection insurance steps in when you're temporarily or permanently unable to work due to an illness or injury. How does it work? Well, if you can't work for a period of time, income protection will typically pay up to 70% of your regular income for a specified period, which could be a few years or it could be till retirement age, depending on your policy. Why might you need this cover? Well, your ability to earn an income is likely your most valuable asset. Income protection safeguards this asset, ensuring that you can continue paying your bills and supporting your family while you recover from a temporary setback. Without it, you might quickly deplete your savings or be forced to take on debt during your recovery period. Number 4 is trauma insurance, or critical illness cover. Now, trauma insurance provides financial support if you're diagnosed with a specific serious medical condition. How it works is if you're diagnosed with one of the covered conditions like cancer, heart disease, or stroke, trauma insurance will pay a lump sum regardless of whether you can work or not. Why would you need it? Well, serious illnesses often come with costs that aren't covered by your standard health insurance or Medicare, such like experimental treatments, home care, or simply taking time off to focus on your recovery. Trauma cover also gives you the financial freedom to make decisions based on what's best for your health, not just on what you can afford. It also provides a financial buffer if you need to reduce your work hours or if your partner needs to take some time off work to care for you. Now, when determining how much cover you need to consider a few things. Your current income and your expenses, your debts and your financial obligations, how many people are dependent on you financially, your lifestyle and your health needs. Everyone's situation is unique, which is why we're here to help you assess your specific needs to find the right balance of protection for you. So let's talk about creating your personalized insurance plan today. We've provided 4 questions for you to answer, And I'm going to give you a little bit of context now on how to answer these questions when you provide your answers. So question number 1 is, if you were to pass away, would the remaining family require an ongoing income to maintain their current standard of living? If so, how much would they need and for how long would they need it? Would you also require your mortgage to be settled so that the family is left debt-free? Question number 2 is, if you're permanently incapacitated and you're unable to earn your income, what amount or what lump sum payment would you need to A, settle the mortgage, and B, cover any additional medical costs? The third question, if you were permanently or temporarily unable to work, what income would you require to cover your ongoing lifestyle expenses? The maximum that you can insure yourself for here is 70% of your current income. Would this be sufficient or would you need more? You can let us know when you answer that question. And then the last question, question 4, is if you were diagnosed with a severe illness such as cancer, heart disease, or stroke, would you want a lump sum payment paid out to you to help you with those extra medical costs or experimental treatments? If so, what lump sum of cover would you require? I hope this provides some context and helps you identify how the different covers work, as well as what we're looking for when we try and assess how much cover you need in each of the different areas. Please complete those questions that we've asked for from you, and we'll discuss these in a lot more detail in our next meeting together.